Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at potential hotspots in the markets. I'm Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. And today it's going to be down and dirty and straightforward. What do we have going on? The markets are all looking weak. We're going to be looking at equities. That's what we're going to focus on today. We'll look at the Dow, the Nasdaq, the S&P, and the Russell. Everything is looking weak this morning. Why? We've got two big things going on. Number one, we just had retail sales numbers and they came in weaker than expected, but they didn't come in a little bit weaker. They came in a lot a bit weaker. And that is something that people will be looking at for the health of the economy, because it is the number one driver for economic activity is retail spending. The second thing, banks earnings. We're kicking off earnings season, and we've had some big banks, Citigroup, making money, but profits dropping. Same with JP Morgan. Wells Fargo squeaked out a little bit of an increase, but it's looking weak in the banking sector. We're going to be having earnings now. We are kicking them off. They're going to be going on for the next couple of weeks. We're going to have to keep track of that to see how the economy is performing. All right, before Brian and I really jump into it and dive into all the nitty gritty and we take a look at the charts, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. You want to get a little peek? I'm just going to do this. Here's a 15-minute chart of the Dow, and you can see, the Dow is getting hammered. We're going to see that in all the other charts. What we're going to be looking at here is where might we be looking for potential buyers to step in and where we might see some support, but it's going to be an ugly open for the stock market. So Brian, let me flip it over to you. There's a lot of things that we could talk about, lots of little pieces of what's going on. Maybe try to talk about some silver lining things about hope in COVID, but let's focus on retail sales and bank earnings today and taking a look at what's going on in the stock market.
Yeah, retail sales, this was a big shock to me. I expected it was probably going to be a little bit up, and if it was down, maybe just barely. And again, I didn't expect the core. I expected just the overall retail sales number. If it was anything, maybe like a 0.01. So a minus 1.9, these are huge ratings. If you guys were around yesterday, I talked about how we're in a weird time where good is bad and bad is good. This is the exact scenario of what we're in right now. Now, the markets have been getting crushed because of it. And really, it all started yesterday. When we look at charts from yesterday, you can see that we're here now. This time yesterday, we were here, right here. And we know what happened yesterday. Bernard said that they're going to use powerful tools to control inflation. Kind of what we expected. It came right back up the levels. And again, that's really what started all this push down. And the data just came out, but yet, even from 6 o'clock on, this was just continuation from what we saw yesterday. Now, we do know that bank profits were lower.
Yep.
And again, it said bank profits were lower because of reduced trading.
Trading activity, okay? Isn't that weird?
Yeah. Well, and it's trading activity. And again, I think it's important to note, banks obviously trade all the time. They trade their own money. They trade against their own clients, things like that. We always talk about how December is not always the best time to trade, and the reason why is because hedge fund money, large bank money is out of the market. They have locked in their profits for the year, so they're able to report back to the money that they manage and things. When it's not a great trading opportunity, the big money doesn't also trade. So, we mention that all the time, and it's interesting to hear that, yes, bank profits are lower because we didn't have the trading revenues coming in.
Right.
It's like, oh. So there are times to trade and times not to trade, but it's just interesting. Something like that where, they're even the ones that are able to kind of move the market around with the massive amounts of money that they use. Even they slowed their trading down in December. So it's always interesting. So that's kind of, adding in everything. And today, I think the story is going to be people seeing this figure, and obviously there's going to be a gut check to it in the very beginning because this is a big number. There's what normal is. There's the normal outside of range. Like if you have like a 1 and a 1.7, that's kind of on the bigger side. Like a 0.5 to a 0.8, that's a normal miss. That's what you expect. A prediction of a 0.2 and then it comes in as a minus 3.2. That's a little bit bigger than normal. So there's going to be a lot of gut reactions for it. But that's not necessarily a bad thing. The initial gut reaction is going to be, holy crap, short everything, right? Get rid of it all. People are going to look at this right now, and they're going to see this and be like, wow, it's already down huge. That 8 week, that's it. It's a red day. sell everything and go. It's kind of the wrong thinking to the whole thing because we've already had to push down because of the powerful tools. But at the same time, what's the Fed's motivation going to be? If retail sales are already collapsing, it shows the economy is already starting to run into some problems. Are they going to be really, really motivated to stack on top of that and start raising interest rates in March? Not really. So this is that bad is not necessarily, a
Yeah,
really bad
that
thing.
it makes a little bit more sense now when you hear this is why they do that good cop, bad cop.
Yeah,
When Powell
yeah,
kind of
yeah,
is a little bit softer, he might, have some glimpse into some of this. So yes,
yeah,
inflation's running hot, but yeah, now we're going to start seeing corporate earnings come in, and this could
yeah,
really
yeah.
complicate things.
Yeah, and it puts them. I mean, like I said, they have a very hard job. They're managing multiple different things out there, and again, it's one of those things that if you can try to stay ahead of it, I think it always works out better than trying to be reactionary. Unfortunately, it's kind of like a person's health, right? If you take great care of yourself, you tend not to have all these problems. That's why healthcare now is really focused on the preventative aspect of things. Because once one problem happens, you take a medication, and then all of a sudden you're getting side effects to that medication that you have to take another medication for. So, like, you see these people that are old retired, they have their pill containers because they got 27 pills every day. Half of them are to counterbalance the symptoms from something else. That's kind of where the Fed's at right now. Oh my God, inflation's at a 40-year high. This is horrible. But at the same time, oh my God, the market's already starting to react and start to push back down again. We're seeing retail sales suffer. Why? Because they're expecting the raise in interest rates. So it's kind of like a self-fulfilling prophecy. Like, yeah, we need to control this, but we're going to crash the market. The
Right.
markets are
Just by
already
talking about it, they can
absolutely.
control it.
And that's what we saw. The huge run up this week and like the ES, well, that's because Powell was very, very dovish, right? Then all of a sudden it came in and then Bernard's like, we're going to use powerful tools to control inflation because inflation is bad. Bam, we get this huge, in 24 hours, we have this huge spike down. And now coupled on top of it, we have retail sales, but everybody here is already short. So I would say I would be looking for opportunities for a reversal today. The initial gut check at the open today is everybody and their brother is going to be hitting a short button. But when everybody's doing it, we've seen this with daily effects before, right? When we see daily effects and we start to see how, you know, way too many people are short, who's next trading against them? It's the people with the big money taking advantage of it. We saw gold forever where 82% of people were net long, and yet it was dropping lower, 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 lower. So I would say today, I mean, there's some interesting levels just a bit lower. Um, if we take where our fib draw was, where we were talking about the different retracement levels, we talked about the 50, and there was already a slice through, and there was a little pop there. And you can see if I extend this across, that was kind of the area where, there was a little bit of resistance coming in, but eventually, it came back up, grabbed some more sellers, and just tanked through. 61.8, it had a little bit of a bounce, but cut through like butter. We're at the 78 right now. Again, the retail trader is about to step in. I would say overall, look for price to come down to 45.74.50. That was the initial target. And we know that the last time price was here, it hit and bounced. So
Yeah.
again, that's one of those potential areas. The reality is it's how spooked are people going to be? And again, if everybody's short, they're not getting short again. They're going to be looking to get profit before they do anything. So I would say if this level is able to hold, and like I said, it's a target first, not an initial bounce. If we can hit and start kind of stabilizing ourselves around that 10-10-30 time frame, that tends to be where you have the opening traders washing out, and then the reversal comes in at 10:30. I wouldn't be looking to go long right from the open. I mean, maybe it slides down there, but I'd be looking really for that confirmation because remember, the emotional response is going to be to
Is
hit
going
that
to
short button.
be right.
Yeah.
And
So
then you might actually see, people expecting that emotional response. It stabilizes some, it even bounces back a little bit, and then the second wave of sellers comes in looking for
mhm.
their opportunity finally. So, but yeah, I do think though that 75, what is it,
75,
75 to
75-ish area.
75,
Yeah,
yeah,
I'm sorry, 45, 75.
45
Yeah.
75, 45
Mhm.
75.
Yeah, and it's been an area. I mean, it's hit twice, so it's not the freshest. But again, it barely breached it both times. So we know that it's an area that there's definitely buyers. How do I know
Yeah,
definitely? How can I say that? Because if there wasn't, both of these times the price would have sliced right through it. If there
right.
wasn't buyers there, how many? That's the question that I don't know. But we do know that it is one potential target to the downside. Now this one is kind of middle of the road. It's at minus one, 0.92. NQ also having some issues, and again, it's funny. NQ slides down, uses a psychological level. Slides down, tags the next one, pulls up, uses it again. Comes over bases again, drops down, rides along it. Comes back down, rides along it again. Rides down. So it is slicing through these levels, and it's kind of the same thing. We didn't draw fibs on this one the other day, but if we did draw fibs all the way up again, you can see that kind of where some of the major areas, it bounced off to 50, it bounced off to 61.8. It kind of did a little bit of a bounce, and it's retraced back again to a psychological level. The 78.6 is where it's at right now. The 100% retrace is sitting down here all the way at
15 150.
Yeah, 15,155 is what I have on here, and again,
Yep.
it may be a
No,
little bit close.
I
I'm
got
just putting on.
15,156. So, yeah.
Yeah,
So
so it's pretty close. And like I said, I'm
we're,
not
we're
right on the line. I just,
you're
you know,
about as close as we can get. We're
yeah,
right around there.
yeah.
So
Yeah, so I would say that's the first downside target. NQ, I would say NQ all week has been very, very, I'd say iffy for lack of a better word. Again, we've seen Apple, kind of take it on the chops as it's rolled back down again. Again, it was kind of like last week. It's like, oh my God, it's the greatest it's ever been, and then it kind of has pulled back. Tesla also having issues. It's still above that 1,000 mark where we're literally at 1,000 right now. That's that big psychological level. We've seen buyers come in and take it here. Obviously, there's some news today from Elon, right? He
ay,
made
ay,
some more
ay.
comments. The market manipulation in the unregulated market has continued. We're seeing that Dogecoin is up 10 now, or 10 and a half. It was up 11 and a half something earlier. Again, if you want textbook manipulation, just
I
search like the
can't.
the Elon Dogecoin relationship.
How does he get away with that? And if anyone's missing it,
I don't know.
uh, every crypto is for the most part, the big cryptos, they're all getting
All the
hit
big
today.
cryptos are all down about 1% right now.
But Dogecoin is, yeah, it's up almost
10 and a
10%
half. Yeah.
because Elon said he would take Dogecoin for certain
Yeah.
merchandise purchases. So it's not
Yeah.
for all merchandise.
You're not buying cars. It's
No, you're
just
not
like
buying
some swag.
cars, and you're not buying any of their all their swag. Just certain. We've got
Yeah.
these used car mats
Yeah.
that
Exactly,
don't
right?
have the
They say
Tesla
Ford.
logo on
Yeah,
them.
they say Ford on them, but
Right? Yeah, nice. Yeah, we got these used
yeah.
Ford
We got
and
it when they yeah.
Toyota and General
Mhm.
Motors car mats.
Yeah. But yeah,
Nice.
market manipulation
Oh,
at its
good
finest.
lord.
So, but I think right now between and again, I think Elon's I think his take on it is there's no news is bad news, right? Again, he's in there. They people see Elon, they think Tesla. So right now it's kind of holding, but it is in an area where there's buying. So I think NQ will have a little bit of an issue. Whoops, move that one. I think again the big call is going to be when we get back there and we find the buyers that are down lower.
Yep.
YM as well. YM is currently the least weak. And again, we have a level that we've seen it. We've talked about, and again, we mentioned before that we're looking for a bounce off of 35, 539. We got some room to run, and it's kind of the same scenario that I'm thinking about with the ES. You guys know I love the opening trades, but right now with it slicing the way that it is, there's not really any clean zones that we can take a long off the open. I think the initial response is going to be everybody trying to sell. And again, ways that you guys could potentially play that. Remember, with the 2 hour durations, there's not only binaries, there's also call spreads and things like that have the shorter durations. They get printed off a current price. So where current price is right now, it's the call spreads are getting printed. If you're thinking we're going to have a big spike down, there may be some opportunity in there that you may be able to get something a little bit out of the money because this has pulled back a little bit. That on a 2 hour basis, yeah, I know that it's it doesn't open till 9:30, but if the initial response is going to be straight down and find this level, you may be able to find a call spread or something like that, somewhere inside of that range. And again, same thing with the binaries. You can use a 9 to 11. That way, you're eating up a little bit of that time that you don't have the opening print volatility. Because when it happens, when that bell rings, it's going to be initial surge one way or the other. And again, I feel like right now with that number being this negative, I feel like it's going to be down. But I do think there's going to be a reversal today. You got to find the bottom. This is one of the potential bottoms. It may go a little bit lower. The potential bottom again. The timing will be between that 10 and 10:30 time frame. That's a majority. I don't have the exact percentage. I can't tell you. It's like 92.875%. But a majority of the reversals, when we do it, when we mark them off, when you look for the reversals for the day, they come in right at that 10:30 time frame. That start of that 10:30 candle. So that's what I'd watch out for. And then Russell, obviously Russell's the weakest. Russell is bouncing off a small level right now, but has a bigger level down here at 2107. Again, Russell's the weakest because again, if retail sales are not happening,
these are the small caps. I mean, this is where retail
the
happens.
small guys get hurt with retail sales the most. Amazon doesn't have an issue, but the mom and pop place on the corner, that's again, that's not quite Russell, but the smaller retails, the smaller retail chains will obviously be affected the most by any type of supply chain lockdowns, all those kinds of things. So, but again, most
And
likely a
this is
reverse
interesting
opportunity later today.
we are going into a holiday weekend. So, boy,
Mhm.
it can make for not as fun of a holiday weekend with this number and corporate
Mhm.
earnings kicking off.
Yeah.
So,
And I'm actually expecting that there's going to be some type of a firework this weekend, just because with everybody being a little bit more relaxed with really horrible news here. We're still, you know, there are still some other things out there. And it looks like 44 minutes ago that Raskin is going for vice chair. I mean, again, we got to get everybody in here we can. And
Mm.
again, Raskin, remember you made comments about Raskin that's kind of like, oh, that's an interesting pick. So
Yeah.
I feel like the everything we've seen with sanctions, the Kremlin being unhappy, the deteriorating. I just feel like this is the weekend that we're going to get some type of a big headline because they know that people are going to be on holiday. Not that no, they're not. I'm not saying there's like invasion or anything like that, but I'm just saying I feel like this will be a big headline this weekend, whether something COVID related or something about the relations of. We've decided that we're not talking anymore because we're not making any ground. I think there'll be some gaps on Sunday night, and again, with Monday being a holiday, it's always harder to, how do you trade those? It always makes it a little bit more difficult Sunday night when you're getting there to kind of do
Right.
things. So,
And, well, and then right, and that's what's open, right?
mhm.
Because FX will be going, but the equities obviously aren't trading, and we won't
Mm.
see the commodities either. So we are, those products.
Yep. And see, here's already one. Canada joins Mexico in challenging U.S. on auto trade rules. So, yeah,
Let
I
the
feel like
games
there's going to,
begin.
yeah,
Yeah.
exactly. That's exactly what we're running into. So,
All right.
we'll
All
see.
right. Well, with that, any questions for Nadex, please email us customerservice@nadex.com. Brian and I are both accessible. Brian's accessible at support@keeptradingsimple.com. I've got my email up there. I hope everyone enjoys the holiday weekend, and it's going to be an interesting day in the equities market. So, as Brian mentioned, yeah, there's the binary options, but taking a look at some of those knockouts and call spreads, depending upon where you see potential moves, potential reversals. Who knows if we're going to have the real big washout today. So there are ways to access price action in the markets. Again, though, with defined risk. So if something totally crazy were to happen, you know what you're getting into before you put on the trade. With that, I want to wish everyone good luck in the markets. Brian and I will catch you again on Tuesday morning.